that cash pool gives you confidence in doing bigger and bigger projects. And not saying that you use your own cash to do the projects, because you can raise capital, you can get investors on board, and then you can leverage and multiply. I'll buy the whole project. A JV partner will come in, an equity partner will come in and fund the deal for me or for us, and say, right, I'll go to the bank, or I got the cash or whatever, and so then we'll split the profit at a percentage that we negotiate at the start. Fear is what stops us all the time, and just look within and say, what is stopping me now? What is stopping me? And it's usually just some rubbish that we're fabricating, and generally an opportunity is there and we don't take it.
What one key piece of advice would you like to give to all the entrepreneurs watching and listening today?
Just keep moving, keep the momentum going, and just be wary of your fear.
Hey, and welcome to another episode of the Business Growth Show. I'm your host, Ethan Castorina, and today I have an awesome guest. His name is Alan Castorina, and he is a wealth creator, speaker, investor, and founder of D-Vision Property Group. Alan's journey began as a commercial pilot and flying instructor, and as he transitioned to the manufacturing industry, he gained expertise in training, project management, and business operations, which laid the foundation for his future success. And his passion for financial freedom led him to master trading systems, futures, options, and real estate, shaping him into a well-rounded financial strategist. And Alan established his own business, D-Vision Property Group, in Brisbane, having already completed over 50 successful projects and counting, specializing in renovations, land development, and commercial properties. And today, he shares his wealth of experience and knowledge through speaking engagements, empowering fellow investors on their journey towards financial prosperity. And Alan's journey is a testament to the power of entrepreneurship, resilience, and lifelong learning, inspiring others to pursue their paths to financial success. Welcome, Alan, and thanks for being on the Business Growth Show.
Thank you, Ethan. That's a great intro. Thanks very much. Yeah, that sums it up in a nutshell, really. Pleasure to be here having a chat with you today.
Yeah, you're welcome, mate. I like to start my podcast with plenty of energy there. So that's my plan. Maybe not as much as a Bruce Buffer or someone, the UFC announcer, but I'll do my best to put it out there. So
you're pretty close.
Yeah, pretty close. Thank you. I've had a couple of people say there was a lot of energy. I had Bruce because I interviewed Bruce, as well as a couple other people say that. So I'll take it where I can, being on thing. But yeah, today's all about you, mate, and looking forward to what you're sharing, today with everyone. I'm sure it's going to be a lot of value there. And you are a successful entrepreneur. Yeah. So those people don't know who you are. Maybe just, introduce yourself. Tell us a little bit more about you and your journey.
Yeah. Well, I mean, I've had a passion for wealth for a long time. Where I gained leverage was when I was working in my younger years. I was spending all my time off and my days off learning, reading books, doing a stack of work. So I had a passion in the early days for shares and stock trading, because that's what my father did. He loved shares. So I read everything I could do about that. And then I learned how to code systems and do mechanical trading for a long time. I still do a bit now. But then I found this passion for property. A few colleagues I was talking to, and I thought, well, that's where I could put my money that I earned from work and trading, I could put into property. So I started growing a portfolio, and that's all I knew back then. I read, the Margaret Lomas books and Jan Summers and all that. So I started building portfolio, and then I realized I just had this bug that I wanted to get out of my work, right? So that's just been there for a long time, especially when I read Michael Gerber's book, The Myth, and all that. All of Kiyosaki's books. I said, all right, that's it. I'm on a mission to get out of here, which was, I had the time to learn. Then I realized I built up a rental portfolio. I ran out of money. I had to turn it into a business. And then so I found some mentors that helped me with that. And then I left work within 12 months. We started flipping houses because that's all we knew at the time. Because we built quite a big rental portfolio in a short period of time, but then we said we'll have to learn how to flip these things and make some cash flow to replace my income. So then that's what we did. Then I found a passion for subdivision. I really saw the scalability of subdivision, and so that's where we are now. and we're into commercial properties, and so all sorts of things in property. And then me and my family, my son, we're also uh, buying businesses. That's what we do. We could see that idea meshing business with property is tight, so we can have a cash flow model and a big profit model with the property development. Yeah, so move money one to the other. So yeah, that's a journey that sort of started back when I was, I don't know, late '90s, early mid '90s actually. So I started all that journey. Yeah.
Yeah.
So it's been pretty wild ride.
Yeah.
Yeah.
Awesome, mate. Yeah, thanks for sharing that. It's always good to hear the background of what it is, and that's why I like to talk about this because I'm all about creating wealth and creating freedom, and business obviously is ideally that cash flow machine, right? Where we're building things over
Mm.
time. Then we need to put it into something. Yes, the business is an asset, of course, in its own right, but ideally we're diversifying, right? We're investing in other things, and obviously in Australia, property is a big thing for that, for a lot of people, and there's multiple ways, of doing that area. So I love talking about these topics. So, it gets, a lot of the business owners, entrepreneurs that we, listen to this about, thinking about what are they putting it into and these different opportunities. So let's delve into it now. Let's talk about property development because that's obviously what you do a lot here. And, there's a lot of people, whether they've never got anything in property, or maybe they've bought a property or two, you know what I mean? Just everything like that, but they're probably not that versed. If someone was thinking about getting into property development, like where would you start? In that area there of how they need to think and what's possible.
Yeah, well, I mean, first things is because there's not a lot of literature out there on it. So you have to sort of surround yourself with people that do it. So go to the property groups, spend your weekends there, going and then learning from them, learning who's who in the zoo, so to speak, and then partnering with somebody, especially get a mentor, and then start just doing things. Going to open inspections, doing the process, learn the process, and then just doing it. So then you're going to make a lot of mistakes, and you're going to learn on the run. So yeah, so first step I'd say get partner with people, start you know working out who you want to be with, and there are some books out there, but the best way is to just go and start doing it. So that's the way I'd do it. I'd avoid just going out and having a crack. It's probably not a good way of doing it, and avoid sort of find a clear path. So just say, oh, I'm going to go and buy and hold, and I'm going to do this. I'm going to try that. Just start with listening to people, and then say, well, I'm interested in that. I might be interested in renovations, or I might be interested in subdivision or commercial, and then stick down that lane and then learn that path, and then master it, and then jump over to another one. Just don't keep, bright shiny object syndrome. So hanging around the right people, you'll sort of things will gel. And so, okay, that's what I seem to like. I'll go and learn a bit about that. Yeah, that's if you're a first timer. Hmm.
Yeah, nice, mate. No, it's definitely good advice there. And I guess so. I know we'll delve each into these three areas right in a moment. But just I think what's important for people is maybe just understanding how to analyze deals, right, for this area there. So what should people be looking for, or in these numbers? Obviously, you've got the renovations, the land subdivisions, and the commercial side of things are all a little bit different in terms of what you're doing. But I guess that's the important part, right? You don't want to buy something that's gonna make you lose money or anything like that in terms of what you do. So what tips could you give us in that area?
Yeah, well, I mean, you're making money out of the added value. So first start with what is selling, what your product are you going to produce. So top down. So start with what you're selling. So let's stick to a renovation, for instance. So go and look for a product that you want to create and see what that's selling for, and then work out the costs, and then a margin, and then that's the purchase prices right at the bottom, right? So and then work out what niche you want to be in. So you want to do high end. I suggest starting on the low end of the scale, so the lower prices, for instance. And so you're looking at the cheaper end of town, so it's lower entry points. So then, right, we're going to pick these suburbs, the cheaper end of town, and then we're going to go and pick, say, 3 suburbs, get really good at that suburb, and go to open inspections and learn what the renovated house is selling for. So it might be selling for $1 million, and you say, right, yeah, roughly about 950 to 105, and then the cost. So the cost is, you're only going to learn that once you put something under contract. So you'll say, right, I'm going to have a guess. I'm going to $1 million. I'm going to have a guess at painting and kitchens and whatever. Make an offer, have an out clause, and then go under contract, and then bring your tradies in. So this is where you're going to have a massive growth of learning. So bring the painter in, bring the kitchen guy in, bring the floor guy in, say how much to do this, how much to do that. And then you're going to get some actuals. And then you say, right, I paid too much for this, crash, perhaps. Or no, I did a really good job, keep going with it. So then crash that contract, move on to the next one. Or you could have a dummy, if you've got some friends or whatever, you can ask them how much things cost. That's how we started. You say, all right, painter, how much would it cost to paint a 3-bedder, inside and out, roughly. And you ask 3 people, and you say 20, 30,000. And you just add it all up, but you're not going to know what you don't know. So you go into this, and the builder might say, oh, you're going to need to knock all this wall out. Well, how much that kind of cost? So you have to still learn it on the run. And that's still like subdivision's the same. Subdivision no different. It's just a little bit more harder because you've got different consultants to deal with, So that's yeah. So start at the top, end price, costs, take the costs out, margin, and you got to buy well. You have to make your money when you buy it.
Yeah, awesome, mate. I love that. And just from a renovation perspective, obviously, it obviously increases the thing. Are you, from your experience in that, is it because you've got 2 options, right? You've got like the long-term hold option and trying to, obviously make money that way, or you can sell it, right? The property and get money there. What are you sort of leaning towards, and everything on that element? Yeah.
Well, it's depending on your growth, where you are in your growth strategy. So in the early days, you're trying to build cash. You're trying to build a cash supply. So then that supports you moving forward. So in the early days, flipping's the way to go. As soon as you start holding, they're going to drag you down. Unless you're holding for cash flow. If you can turn a property into a cash flow product that you're actually positively geared, maybe. But I know the best way is, or for me, it was to turn them over, build the cash, because that cash pool gives you confidence in doing bigger and bigger projects. And not saying that you use your own cash to do the projects, because you can raise capital, you can get investors on board, and then you can leverage and multiply. But the cash, remember, if you're doing it as a business, gives you a bit of peace of mind that you've got some money to start paying people to help you. You need to start leveraging teams, right? So get some virtual assistants if you want to start cheap, or get an acquisition manager on board. So you need to build a cash pool. So I suggest, flipping them first. And then after a while, you start building a bit of momentum and building a buffer, then maybe keep one every now and then. So you're starting to build your portfolio as well. And then when you're doing subdivisions, it's a little bit easier, because you might subdivide the 5-10 lotter. You might keep 2 out of that subdivision. It's a little bit easier. It's a no-brainer. And then you might keep them and then build a few houses on them later down the track. So you can do a bit of a both strategy there with subdivisions.
Yeah, awesome, mate. Love that. Let's talk a bit more about subdivisions here, because I think there's a lot of massive potential, right? And for people out there, like, it could be a smaller, where you split into 2, or it could be, like you said, 5 to 10, where you're getting bigger places, maybe a little bit further out there, from the city. And then, you've got a lot of potential, right, to be able to develop that into multiple dwellings and stuff. So just talk about the benefits for everyone here that may not be as aware of what subdivisions can do, and I guess that process as well.
Well, subdivisions is scalable, right? So you're sort of limited in the renovation model. You're capped out. You get a cap out of a certain, there's amount of work that you do to make a certain amount of money, and then it becomes a problem with pipeline stock to do it. Whereas subdivision, there's more or less the same amount of work to do a 10 lot is to do a 30 lot. And then the zeros just add up, right? It's just a bit more stress. Don't get me wrong. There's more consultants. So you don't want to be jumping into a 30 lot straight away. You want to start with a little 2 lotter, 2-3 lotter, just move up the ladder slowly. But the advantage of to answer your question, is scalability, right? And for me, it's a bit more than that. I like, to me, it's creating a lot of homes. It's like scalability in another aspect. I'm creating a lot of homes for people. I'm helping a lot more people with a similar amount of effort. Whereas Reno, it's one off, one off, one off. Yes, it's more of a purpose thing for me, when it's subdivisions. Yeah.
Yeah, and so these bigger ones, let's say, or whatever, like what sort of land size are you looking at, and I guess what types of dwellings, because you could put different things on them, right? As well, there. What are you looking at in that way? Yeah.
Well, that's a good question, because when you're in business of subdividing, when you're doing subdivisions, we want to turn over stock quite. It's about velocity of cash, right? Velocity of money. You don't want to be sitting in a certain property for very long, and so you want to be able to uh, produce the type of product that sells quickly. And generally, we aim for the cheaper end of town, like the investor type stock, the affordable type of block of land. Whereas if you're producing $1 million block in Brisbane, it's slow to move, a lot slower to move. It's a big decision for someone to buy it. Well, I've done it. The big decision, they've got to work out what type of house. They might have to sell a house to buy that. So it's a slower sales rate, and so yeah, I tend to go on the cheaper end of town. So then I'm targeting the affordable market, the first time buyer, the first home buyer, the investor. So then, to answer your question with the type of stock we're putting on it, it's generally a low set home. The general $300,000-400,000 build, and so I design my blocks accordingly, and I try and fit as many blocks as I can on the site to make it stack, and then I put these low sets on it. So then the price is, because people want to buy a home, they want to be able to afford. I try to keep it at the moment, around the million mark. It's where it's at. There's nothing wrong with doing boutique stuff, but that's not like turnover, like high turnover stock, especially if it's not regular shape blocks and it's slopey, and it takes a lot of thought and a lot of due diligence for the buyer to actually buy it off you. You don't want to keep the block as simple as possible. Make it an easy decision for them. And then also you can partner with builders that would buy. You got a 30 lotter, they might buy 10 off you at once. Whereas if you got a boutique site, you're not going to be able to sell 10 at once. So yeah, hopefully that answers your question. What sort of stuff we're looking for? Like, that's what I look for anyway.
Yeah. So then, great answers. So just from my understanding, so you've almost got two models in some way. You could subdivide and just sell the land, or then you could build it either yourself or partner with builders, and then you build the thing, and then obviously you could sell them or keep a couple like that as well. It's sort of like a combination model. Is that about right?
That's right. I don't build, because it just slows the process down of getting paid. So you're holding more stock, and then you're adding another risk level to your business model. You're adding the builder. I mean, if you've got a good builder, that's great. But if you're not sure, so it's better off sometimes just to. Some people do, and there are builder developers. There's guys that are work that have builders in their team, in their company, and that's their model, right? But for me, I just sell the blocks off, and yeah, I don't wait for the bill to get paid.
Yeah, nice. And is there do options come into this as well, potentially on how you do it, so that you can sort of do a little bit of due diligence without, not having to
Yeah,
go all in, type of thing like that?
yeah, the options are cool. You can, like for instance, an option is a great strategy when say we're doing one at the moment where an owner owns a big parcel of land and they've got their house and they want to live there, but they want to divest their big block of land that they're sick of looking after. So what we do in that instance is we put a contract on the site, and we put an option over the top of it, where we say, well, we'll subdivide, we'll create titles, and we'll sell off the balance lot after the titles, right? And then we pay them the money that we said that we were going to buy their balance lot from, and then we keep the rest. And the beauty of the options agreement is that you don't have to pay that stamp duty. I can have control of the site and create the titles, on sell that on sell those blocks of land to a third party buyer without actually me buying it and them buying it off me. So I'm saving that stamp duty. So that's the beauty of options. Yeah, and you're right. It's also handy to, if you've got a big parcel of land out somewhere and you're really not sure what council are going to decide on it, you can maybe lock it up on an option agreement. Say to the owner, I'll pay you this. I'll pay you a little bit more actually, because it might take me 3 years to decide or get get it over council. And they'll say, okay, I'll join the ride with you. And then you got that option then to be able to on-sell it or take it off their hands and actually buy it. Yeah, so there's a couple of ways of using the option agreements. They're great. They're good. It's just sometimes the sellers are a bit spooked by it because it's another set of documents on top of the existing contract. Yeah, so but if you've got a purpose behind it, if they can see the reason why you're doing it and it fits, it's actually helping them get what they want, then it works.
Yeah, definitely. And from my knowledge, this is where like a town planner or someone gets involved, right, in this process, correct? To make sure that it goes through that what it needs
Yeah,
to.
yeah. Well, good. I mean, the subdivision team is quite big in a lot of cases. In the small developments, 2-3 lotters, it's not. That's why I said start there, because you don't need a big team. But yeah, the town planner deals with the council requirements and how many blocks of land you can get out of it and all that sort of stuff to the council code. But you also need a very important person as a civil engineer who puts all the services in, the roads, the sewer, the water, and then you need an electrical engineer to get the power in, and then perhaps a traffic engineer if you're building roads, and then access and exit. So yeah, but the town planner, generally the town planner, the surveyor measures, make sure that it's a bit like the building and pest guy. He comes in, makes sure everything's okay. You got exactly the area that you're actually buying. So you just come in and survey it. So you do that in the due diligence period. So surveyor, town planner, civil engineer, electrical engineers are probably the guys that you want right at the start. Yeah.
Yeah. Cool, mate.
Yeah.
And then are
Yeah.
you actually are you actually building the roads and everything like that as well, or just planning it?
Building them, yeah. We're
Yeah,
building them.
building it.
Yeah. So all the curb channel, the street lights, underground power, whatever, sewer. We've got to connect them so someone can just come in, their builder can come in, just put the slab down, connect all the pipes up, and they live.
Yeah, cool, mate. Nice. No, it's they're definitely very powerful, and I think it's a smart strategy on doing it for the smaller blocks, where people can afford and stuff like that. Because some people might, want to try and do extravagant stuff, but it might not be where the market is harder to sell and everything like that.
Yeah. Yeah.
Yeah.
Yeah, that's right. I mean, if you sort of got a parcel of land that your father left you, and you say, well, let's do something nice and boutique and put up some really beautiful palm trees, and we don't care if it takes 10 years to sell, that's fine. But if you're doing a business out of it, that's not, yeah, it won't work, and especially in the early days.
Yeah, definitely. Do you see it a bit with families? Like I'm just thinking of off the top of my head now, right? Where let's say someone passed away, there's a family house, but you've got multiple siblings or things like that, right? And they're going, well, whether the house, maybe they're going, oh, there's all this room, maybe the house is a bit old. Why don't we subdivide, put a couple of things on there and stuff like that? Do you ever see some of that stuff coming your way?
Yeah, yeah. I mean, the family wanting to subdivide themselves.
Yeah.
Yeah, 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 all the time. Actually, well, there's one we're working with now. He rang us up. I thought, oh, here's someone that wants to sell their block, but they actually a couple of older brothers, looking after their big parcel of land, and they asked us to manage the subdivision, but they actually want to retain ownership, and they want to cut it all up for themselves and then give some to their families and the kids and all that, which is pretty cool. So yeah, that's it happens a lot. Yeah, so but actually buying off people like that, if there's too many siblings, it gets difficult. There's too many decision makers, and it becomes hard to say, you guys are going to make a decision or what. So yeah, so horse
Yeah.
of courses.
Yeah, nice, mate. No, it's like you said, it's probably harder to buy it. You may as well just help them and
Help
get
them,
paid
yeah,
for that part, and that way you don't have to deal with all
yeah,
that side of things. And still create something and help them, right? People on their
yeah,
journey.
yeah.
Um,
Go on that journey with them. That's right. Yeah,
yeah. Nice. Awesome.
Mm.
Let's talk a bit more around commercial properties now, because we're talking more residential now on the commercial side. So yeah, tell us more about this, the differences, the benefits of commercial side.
Yeah, well, commercial. There's a few more exit strategies with that because you can turn them into cash flow machines. So you can buy a commercial property, we flip them, or you can also hold them or sell a bit off. You know what I mean? So commercial property, the way I do is we blend a little bit of our renovation skills as well into it. So we'll buy something run down and then lift its value with some tidy up and the leases and raise its value, and then we might sell it or we keep it, right? So the beauty about that is when you finish with it, you've got a good income, and you can actually refinance. And if you've got some investors involved, you can refinance them out, and it could be a zero cash hold for you at the end. So you're getting money there for no money in. Yeah. The other thing I like commercial because it's diverse, and you can be in different states. We can diverse out of Brisbane, and 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 I like the industrial space more than anything because it's solid. Especially if you niche down into a certain market, like the industrial space and the distribution centers and that sort of thing. Even the small flex warehouses, that it's always going to have a tenant, especially in well located areas. And then there's also retail, so decent sized retail that you've got multiple tenants. So then you've got multiple income streams, and then that not one if one tenant leaves, you still got a few others to carry you. And not saying there's anything wrong with the one major tenant, like if you've got a national brand, Bunnings building, for instance, there's nothing wrong with that. But for an entry point, when you're starting out in commercial, you've got to go cheaper. Yeah.
Yeah, cool. No, I like it. Because there's definitely high yields, right? And everything on the commercial properties. So it can be more of a cash flow machine than the residential, which is bigger numbers, right? And the loans and stuff is there's more deposits and stuff, right? They need to be going down and everything for the
Yeah.
loans.
Yeah, that's right. And then I mean the value is all in the leases. So everything about commercial is about, well, you got to have a good building, but the leases hold a lot of the value. So you're working. It's a little bit different to the residential side. You're working more on the back end of it. You're working with the tenants. You're making sure they're happy. Get the rents up as high as you can, and that lifts the value of the whole project.
Yeah, nice. And because you can put in like a certain percentage, whether it's 3% or more, like increases per year and all of that, right, into the
Yeah,
leases and stuff. So then you
yeah,
get that growth. Yeah.
yeah. That's right. And that leads on to the fact that the tenant generally looks after the building. That you can get gross leases and net leases. If you've got net leases, they pay for everything, including all the expenses there. So for the landowner, for the building owner, it's great because you don't have to worry about all that stuff. And yeah, the so what I'm saying is that the commercial tenant is a better tenant to deal with for headaches, with, whereas residential tenants, you've got the turnover, and the commercial tenant will generally look after the building for you. They'll take care of it because that's their business, right? They have to look after that building. So once you've done the work, it's more of a set forget than a residential building.
Yeah. And from
Mm.
my understanding as well, it can be a bit of a combination if you want to improve it, right? So let's say you got a tenant in there, go, hey, we want to do this, this, and this. It could almost be a joint approach, right? Where you
Mm.
both put in or something like that. So then, increases the value overall, but you don't have to fork all the money out as the owner type of thing too.
Yeah, yeah, that's right. Yeah, they'll add value with you. That's correct. Yeah, it
Yeah.
depends on the tenant, of course. Yeah, on the type of tenant.
Yeah. Nice. Yeah, cool, mate. Definitely sounds very powerful on the property development side of what we can do there. Let's switch it up a little bit now. Let's talk about partnerships. I think this is a really powerful topic, and I love to partner. I know you talked about partnering as well, right, with certain people in this property journey or its business, everything like that there. How do you look at partnerships and the benefits and what partnerships can bring?
Yeah, partnerships are, yeah, like you said, they're extremely powerful, especially in property, business property. Sometimes the owner doesn't want to sell and uh, give it all to you. They might say, well, I don't know how to develop, but how about you come on board with me, or we join up together and we share the profits at the other end. And that's a powerful. So then I don't have to buy the property, which is a tick for me, and then so I don't have to get the banks and whatever and pay holding costs. And it's a bonus for them because they get to uh, realize some of the growth that I produce out of it. So that's a partnership, and that's a joint venture, right? And then yeah, you can do that with any property, that joint venture model. Yeah, and the other way is partnering with investors. I got a lot of investors that partner with me, so that's the other part of partnerships, that people come and join me as money partners, and they will fund our developments, and we'll share some interest payments to them, so they've got a really good interest return on it. They join us in our property project, or in some cases we'll share some of the profits with them. So they might say, right, well, I'll buy the whole project with you because I own it now, it's not the landowner. I'll buy the whole project. Um, a JV partner will come in, an equity partner will come in and fund the deal for me or for us, and so right, I'll go to the bank, or I got the cash or whatever, and so then we'll split the profit at a percentage that we negotiate at the start. So it might be like 50-50, for instance. You fund it all, I'll do all the work, we'll split it 50-50. So that's another type of partnership. So you can do a partnership with the owner of the land, or you can do a partnership with people that have the money or want to join you in that respect. Yeah.
Yeah, definitely. Awesome, mate. Massive one on
Powerful.
partnerships there. So you don't need your own money, right? That's what a lot of people probably
That's
think
right.
going, I don't have all these billions of dollars. Well, you don't really need it, right?
No, no, that's right. You can do that's right. And if you have got money, you can give it to somebody else and still bring people in. So you can do two things at once. Yeah.
Yeah, you can say, "Hey,
Everyone,
Alan,
yeah,
I got some cash. What can we do with some property
that's
developments or
right.
things, right?"
Yeah, that's right. Yeah. Make it work. Make it work hard.
Yeah,
Yeah.
nice. Yeah, it's
Yeah.
good. It's
That's
I
interesting.
think that's what I want people to open up. Yes, you got the cash. Obviously, you can do it. Whether it's yourself, whether it's partnering with someone like you, Alan, right? To do something there. Or there's different ways, right, of structuring it and things like that as you're sort of getting into it. So yeah, I think that's really powerful. Um,
Yeah.
um,
Yeah, that's right. I mean, sorry, I
you're right.
interrupted you, but you're right. You said it before. Nearly everyone thinks they have to do it on their own, and that's so limiting because you got all this opportunity out there, and you say, well, I haven't got enough money to do it. But you say, well, there's a heap of people out there that got money, lots of money out there. It's either sitting in their house as equity, or it's sitting in the bank account earning 2%, or so you just have to get known, and show them the opportunity to say, well, jump on the journey with me because I can add value to this. We can all make money together. Your money with my skills, let's grow together. And that's, and there's a lot of actual developers that will say, oh, I'm not going to do anything until I've got enough money in my bank account. So, well, you're going to stop yourself there. Just use your money as a bit of a buffer, or use your money to invest in a friend that's developing, and then bring money in from other people. So you're making more money work. And the more money you make work, the more money everyone makes. So that's the way I think about it. Yeah.
Definitely. And
Yeah.
I look at a lot of deals in other ways, right? And generally about deals, whether it's property or business or other things, is also being a connector, right? So you don't even have to have the money or have the expertise. You just got to
Yeah.
put the two together, and you can get something out of it too, right? Do you see some of that
Yeah.
as well?
Yeah. That's another level again, isn't it? Yeah. So yeah, that's right. Yeah. Yeah. We find things that we don't want to do, whether it's property or business, and we'll find somebody else that wants to do it, that can do it. We'll just connect the two up, and we might be a part of it, So that's great, and it's powerful, like white labels, all that sort of stuff. We with like I said, with that one, the managing that with the two brothers, that's a classic example. I connect them up with my team, and I'll take a slice out of it, and I'll connect them up with my sales team. I'll connect them up with my production team. So, I mean, that's a classic example of what you're saying. Helping everyone, and they're happy. They say, "Well, I've got a ready-made system here. I'm just tapping into it, and I just pay a little bit of money, and I don't have to do all the work." So it's really good.
Yeah. Yeah, exactly, mate. So that's what we're here for, right? Is getting people to
Yeah, that's
understand
right.
that there's a lot of options, being creative, how do I see opportunities? So
Yeah,
yeah,
it's classic. Yeah,
definitely, mate.
yeah,
Let's talk quickly around the business acquisition side, because you mentioned that as well, right? That you've been starting to get into more now, which I look into as well. I think there's a lot of opportunity for acquisitions. Like you said, you could put similar businesses together, or maybe you just wanting to grow, the current business more in terms of what you're doing. So what are you looking for? And what could you tell people if they're thinking about, I guess, the acquisition side, of business?
yeah. Well, we so targeting the property service businesses at this point, and so we're looking at one now. We're just about to go under contract with the property service business, and so it sort of meshes with our skill sets, our knowledge base, and our team that we already have. And yeah, so looking for businesses that have got a EBITDA higher than 800,000, for instance, and a great owner. We'll go and have a chat. We're going to have a chat to the owner, and it might take weeks or months to have a chat with them, and then get to know them. They're interested, we'll go a little bit further, get to an agreement and price, and go under contract and do the DD and buy it. The idea is that uh, the owner generally is the ones that we target, or the ones that we find a lot of, is that the owner has had enough. They just want to cash in and go to Europe for 5 years, or just over it, or just get to the limit of their capacity. They say, I don't know how to grow anymore, but I really don't care. So that's when we can come in. We'll take it over. So, well, this is great. You've actually done a really great job getting it to this point, because I don't want to start anything up. We don't. That's hard, getting a rocket off the. We just want to get something that's already running, and this is a great job you've done so far. Let's take it off your hands. We'll give you the money that you're chasing, right? And then build on that business, grow it. Expand geographically or whatever, or buy the suppliers or partnerships, whatever. So, yeah, that's it in a nutshell. And how it helps us is that it brings cash flow in, to support because property, what I didn't say, one of the negatives is, especially with subdivision, it's lumpy, right? I buy a 30 lot subdivision today. I won't get paid for 3 years. So you got to survive between then, and that's why you want to build your cash up, right? So, but having some businesses involved makes a solid foundation of cash flow, and it's exciting. I find it really exciting business. And my eldest son's in on it. He loves it. He just doesn't sleep, I reckon, that young fellow. He enjoys it, and so he's out there talking to business owners and doing a lot of stuff in that space.
Yeah, awesome, mate. I love
Yeah.
it. Definitely need the cash flow machine important, and awesome to get the family, the son involved. I've only got a 6-month-old son now, but I'm
Oh
already
yeah.
getting him looking over my shoulder sometimes, and I'm doing some business, going ready to do some stuff. But not
Yeah.
old enough yet to necessarily get him on the books. But
Yeah.
that'll be the plan.
Yeah. Well, he's starting early. I tell you, that's he'll be he'll be he'll be doing it really quickly. Yeah, that's a great
That's it.
start.
That's the
six
plan.
months.
So awesome, mate. Just one quick one. Coaching, mentoring, right? I think it's been really massive for me, right, in my growth, in my businesses, in my life, in my mindset, and all of that. How important has coaching, mentoring been for you, and what it's helped you to achieve?
Oh, extremely. Yeah, I wouldn't be where we are today without them. My mentors. I got four mentors now, and each bringing a different. a different aspect and skill set, some knowledge to me. The mentor is someone you can look up to, someone you can take you out of your, can I say, bullshit? Because we get into a lot, our little headspace a lot, and you can't snap out of it on your own. You need somebody to say, look, just get on with it, move. You know what you're doing, or you don't know what you're doing. They say, well, go to this guy, go that guy. They'll be the connector for you, or just fill the gaps. And it's leverage. You're tapping into their mistakes. You're tapping into this things that they've done all their life, and you jump massive jump up to the next level rather than doing it on your own. So like we were saying about before about cash, doing things on your own. It's other people's knowledge, OPK, using other people's knowledge, and then giving back to them too. You want to be coachable, you want to help them out, and then eventually some of my mentors I'm good friends with. It's lifelong relationships, so they're really good, essential. In short answer to that, yes.
Yeah, definitely, mate. Completely agree. And I'm like you. I'm sure we both invested hundreds of thousands of dollars and things like that, right, into our coaches and mentors. And a lot of people are like, oh, but I could have bought a property for that or something like that. Yeah, but you know what? The way we've grown ourselves and how much more we can grow from that is so much more than investing that money, because we're our best asset. So love that side of it. Always wanted to see it from your perspective, because I know you're an avid learner and growing yourself with all of that team around you. So yeah, mate, it's been a bit, shared so much gold with us here today. I guess as we're starting to wrap up, what one key piece of advice would you like to give to all the entrepreneurs watching and listening today?
I think just keep moving, keep the momentum going, just and just be wary of your fears, because I'm that we're so full of fear. Fear is what stops us all the time, and just look within and say, what is stopping me now? What is stopping me? And it's usually just some rubbish that we're fabricating, and generally an opportunity is there and we don't take it. I'm a bit scared, or I haven't got enough money, or I haven't got enough knowledge. So righto, is it real? And then if it generally it isn't, and reach out to other people. Just bridge that gap, just step over that line, and you'll find that it was just a glass ceiling. It wasn't there in the first place, and you'll get to the next level. So yeah, just keep momentum up, keep going. And the bigger your goals, the bigger the problems, right? So don't expect it all disappear. This fairyland to come. Oh, look, I'm floating in fluffy clouds. It's going to be bigger problems, so be prepared for it. But that's why you got to have people around you. Surround yourself and keep surrounding yourself by that network, and keep growing. Yeah.
Yeah, awesome, mate. Love it. Definitely very important to go there. It's like feel the fear and do it anyway, as they say, right? There and then get assistance where needed. So love it, mate. Well, yeah, we connected through our network. So learned about your awesome journey from starting as a commercial pilot and flight instructor to now being the founder of Division Property Group. Awesome guy, mate. So knowledgeable. You shared so much gold with us here today, all about the property development, all those different elements, partnerships, acquisitions, the business as well. Extremely powerful. I'm sure you continue to empower investors on their journey towards financial prosperity. Very grateful that we connected. Look forward to partnering with you as well. So, Alan, how can people find you and get in contact with you?
Yeah, thanks, Ethan. On my Insta messenger under my name, Alan Castorina, look me up there, and that's the best way to get hold of me. Yeah.
Definitely. Awesome. We'll definitely check out Alan there on the socials, and we'll chuck his website in there as well. For that, if you want to know more on how he can help on the property development side, on what he does, especially in Brisbane, as well as stuff around Australia. So, mate, it's been a pleasure interviewing you, and thanks for being on the Business Grow Show.
Yeah, thanks very much, Ethan. I enjoyed that. It was really good. You're a great interviewer.
Thank you for watching and listening to the Business Growth Show, where we talk about everything on business growth. And please like, subscribe, and leave us a 5-star review. You can find me on LinkedIn, Facebook, Instagram, and YouTube as Ethan Cassiotis, or visit my website, ethancassiotis.com. And if you want to grow and scale your business, you can reach out to me on any platform to see if we're a good fit. So until next time, remember that our business grows where we learn skills and take action using them in spite of fear. So let's create wealth and freedom together.